Good morning and welcome everyone to the Schwab YouTube coaching channel. It's the Monday edition of Trader Talk in today's market. I'm your host, Kevin Horner, joining you from the Denver studios. And today, pleased to be joined by my friend, Mr. Ray Kimbrell. Good morning, Ray. It's great to see you again on this fine Monday. How you doing?
Man, it's great to be here, and I'm in my house studio and here in Louisville, Texas. But yeah, it's great to be here with you as always, kicking off the week.
Yes, sir. We're back to a full week, Ray. We got a
Yeah,
full
man.
week of business, full week of market following the long holiday. Hope you all had a fantastic 4th of July weekend celebration opportunity to recharge your own batteries there. Today we are going to get into the news and the charts of the morning as always. We are joined by fellow coach, Connie Hill there in the chat. Make sure you say hey to Connie, who will get to comments and questions that Ray and I are unable to, but we always keep an eye on what's happening there in the chat as best we can. We'd like to hear from you, so feel free to post for the duration of our show. We go about 45 minutes in total. You can follow us all on X. We're all available there individually for you. Kevin Horner, CS, Ray Kimbrell, CS, and Connie Hill, CS. A good spot to find us when we're not hosting classes for you here. And don't forget to be subscribed to the Schwab YouTube coaching channel. With that, let us get to our disclosures and we will jump to the chart. So please remember, everything we cover for you today should be considered informational and educational only. We are not making any recommendations here nor any endorsement for a specific approach to trading. What we do offer you, however, is education of the markets, education of technical analysis in relation to the market movements we're seeing. But what we offer in that way are just concepts and strategies traders might choose to employ. Remember to do your own due diligence. And if you're utilizing these strategies, these are just one of the decision-making puzzle pieces. These are not the entirety of it. So we discourage you from making decisions only based on technical analysis here. Now, if you're joining us for the first time, perhaps, we follow an agenda that starts broadly. We work with our major indices to begin. We'll look at the S&P 500, the Russell 2000, the NASDAQ 100, the semiconductors, and then we work our way through sectors on the move, additional industry groups that may be of note, as well as stocks in the news. And we try to do that to gain an understanding, really, of where opportunity may lie any given day. So with that, Ray, we like to start with the SPX. Ray, I'm curious your thoughts here. We haven't really gone anywhere in the last few months, the last couple of months up here. More or less consolidation, I think a lot of traders would point to. But what is it that you are watching maybe for a decision one way or the other?
Yeah, kind of a breakout of that triangle that it's kind of formed right there. If you can draw right from the high, yeah, right there.
Aha.
I'd say a little below it, yeah, right there, and then kind of following your the moving average that you have drawn almost, or that the computer's drawn the 50-day. But you can
Yep.
see a triangle that it kind of formed, and see if it can break out of that indecision that it's kind of making as it's squeezing down. That's kind of what I'm looking at, watching that, and even though the Dow's only 30 companies, they're pretty hefty ones, as we say. And watching how the Dow's in comparing with the SPX. But yeah, I'm liking the uh, kind of what it's doing with the triangle, and if it breaks out of that resistance, the high side resistance, um, and continue that upward trend, that's what I'm looking at.
And I think you're not alone there, Ray. You know, we tend to get a little bit bogged down by consolidation windows like this because
Yeah.
we've made lower highs and higher lows as we bring price together. So we're kind of squeezing the action a little bit. But if you're a trend trader, Ray, probably just monitoring something like the 50-day moving average could be the trend following indicator of note right here. I say that, Ray, just because the one time we were below it on a close, we were immediately right back above it, weren't we?
Yeah, we were, and that's kind of what I was watching when I'm looking at that triangle and looking at your 50-day, how it's really following it pretty tightly,
Yeah.
in relation. And so yeah, that's a good point. The When it did fall below, it didn't stay below long. I mean, it actually gapped up.
Yeah. And that's
So
not, I mean, that's not a negative, obviously.
No.
to test the level. I think the hard thing that a lot of traders need to grow more comfortable with as time passes, as you watch a lot of charts, we traders tend to think that a single day below a level matters more than maybe a series, but the speed, as you called it out, the speed with which we got right back above the 50-day, we know we're above the 20-day, and these moving averages, they are quite different, right? Because one of them is a 4-week moving average, the other is a 10-week moving average. So time frame really matters here for the trend trader. But Ray, if it wasn't the 50-day, if a trader were a little more short term in nature, they might find themselves working with the 20-day, and we've got 4 potential sessions in a row above the 20-day as well.
Yeah, and I look at the 10 and the 20. I got on mine you can't see up here, folks, but I have a 10-day going, and it's when you put that 10-day along with a 1040 um, cross and how it's looking, it's extremely tight. I don't
Okay.
know if you have one set up, pre-set up a 2050 or a 1040. When you put those two together and look at them, it's forming a really pretty good, strong level of support, actually.
Interesting, because right in the middle of all the price action here, you can see very, very tight, admittedly, Ray, but
Yeah.
the rally window began here with the 10-day on April 1. Interestingly, we monitor here frequently, at least the 20-day. We didn't
Mhm.
catch the 20-day until a week later, April 8.
Yeah.
But if you were using the 10-day all along, Ray, you would have been, bullish, supportive with the 10-day moving average, and then briefly resisted. Then you're above it for 5 days or so. Then you're back above below it, and then you're back above it. Ray, do you take anything from the fact that the 10-day is nice and flat all of a sudden? Because I think the walkaway is, well, we really haven't moved price much in the last 2, 3 weeks.
Yeah, and you kind of started with that of kind of how it's just hovering right around that area right there.
Yeah.
To see if it continues to break. So I think that the line you drew on the top for that like now current resistance,
Hmm.
if it breaks through that, you might see it, channeling just a little bit above now. You know what I'm
Okay.
saying? And if it again the big if, right? And it's a
Yeah.
frog, right? But but it's that's to see where it goes. Um, that's how kind of I'm looking at it is, where's it been? As a matter of fact, if you look and on your chart there, um, even though it channeled down a little bit, if you drew a channel and using the 10-day as a support line and that
Hmm.
resistance line, you see a little it kind of makes a channel as it drove down through there. And if it breaks above that, I think you could get your next level
Okay.
up. That's
So
what I'm looking at.
interesting. I was
You're
looking at
staying bullish.
this. I'm gonna look at it on the intra period. All those lines that we just drew on the daily
Look at
are
that.
now here as well on my nine. I think this is a 90-day chart. Nope, this is a 30-day 1 hour, everybody. So take a look. We can always find something working in the shorter term, Ray. And I feel like this is a good idea to always drill in even to the shorter window so you'll get some clarity on things. A
Yeah.
couple of things stand out here, Ray. We had a gap zone in here, right through here,
Yep.
and then where was our intra-period low? The low that we saw from basically over the weekend, essentially, was in that same zone. So we rallied off of this support, made a new move to the resistance band, so to speak, got pulled back to the next area of potential support, and to this point have held. Now, the one takeaway that I have still is this high
Yep.
is lower than the last one. And so are we still in consolidation? Well, we have to maybe think so because here's our current candle, Ray. It
Yep.
opened at the line. The highest high we've made this first 5 minutes, 10 minutes, has been lower than the high we made there. So we can still take in those very plain Jane technical analysis 101 thoughts, can't we?
You can. Now, granted, it is what? How many minutes in? 10 minutes in, right?
Nine,
Not even 10 minutes.
nine.
So, yeah, we'll see what happens. But the thing that it's kind of interesting, Kevin, is I mean, look at that shadow, the wick. It hit right on
On
that
it.
resistance. And granted, I know support resistance is an area,
Yep.
but look where it went to
I
and just slapped it right back down. And so it'd be interesting to see how we run through the day here today.
It's funny how that works, right? Whether it's a manually drawn line like mine, or it's a moving average line or something like that. It's funny how those levels work out, right? I mean,
Yeah.
we're not the only ones watching these technical levels, of course. And one of the key reminders of technical analysis is the concept of what we refer to as self-fulfillment, which is basically that we're all watching the same thing. And so when you take out a price level to the upside, it's become significant. One that's been resistant all the while, you move through it to the upside. Suddenly, everybody that was watching it as resistance says, aha, resistance is gone. Now we can buy in. And then they follow through. They do that, and you get a little bit of a rally. Now, whether that rally sticks or not always remains to be seen, Ray. But
Yeah.
the idea that self-fulfillment is a negative, I don't buy into, because I think it's doesn't make it necessarily easier by any means, but it is something else to build your thoughts, your process around, if nothing else. So
Exactly.
I always like to remind ourselves that what we talk about with these concepts, often it can just be brought back to the lowest common denominator: higher highs, higher lows, lower highs, lower lows, support, resistance. It doesn't have to be very advanced to be helpful.
Yeah.
So Ray, let's see how we're looking in the Nasdaq 100. The Nasdaq had tech heavy, obviously had a rough week. I'm putting the 50-day back up, and Ray, the thing that okay, this I think what you said about the SPX, this looks a lot cleaner to the trader eyeballing this now, because we've not even closed below the 50-day here. But this also looks rather like consolidation at these upper levels.
Yeah. Same triangle almost is drawn in there. It's interesting how, um, if you look at look at the trend back, you know, to the left of where you're drawn, that
Yeah.
nice long, yeah, that nice long, steady, even. I mean, candles are almost exactly the same size. It was just a
Yep.
steady, nice and dull drive. And then look at the craziness.
Yeah.
It's like someone went, just,
Exactly. Like, okay, we've had big candles, actually a little bit of big candles both ways. So
yeah,
in consolidation, we've had volatility, which is a little bit uncharacteristic, I would say. At least when you get a rally like this, you're going to get some back and fill happening to price action. That much we expect. But Ray, would you have expected the level of volatility we've seen, at least as it relates to the Nasdaq?
man, I tell you, and I know we just had earnings season, and then we're kicking back into another one, and that that was part of it. Plus, you had the war. You had a lot of things contributing. But I don't know if what's that, a 1 year chart? What is that, a 1 year?
Yeah, well, yeah, 1 year, but I've zoomed us in quite a bit. But
Yeah, I mean, we went through a lot of earnings, during a past time when it's steady growth up, and so you can't blame it all on the earnings season, or you can't, but um. the war you can't even say that because it was a steady drive up until it hit late May, right?
yeah,
And so there's a lot of volatility hitting in there. Probably I think it might be considered a lot of the earnings in there, and just the instability and the
hmm
unknown and all that was going on. But it did go crazy there for last month and a half.
Well, I'm always reminded, Ray, of the that great idiom of the market, the bull market climbing a wall of worry, which is very popular, right? I mean, we have a
Yep.
lot of worries. There's a lot of headline risk, a lot of risk detailed about which to think and be worried, and those worries tend to keep specific traders on the sidelines, investors on the sidelines, retail money on the sidelines, denying the rally that they are watching unfold, because you have all of those risks. And only when those individuals capitulate and finally go, well, clearly this is the best bull market we've ever seen, I need to be investing, that's when things turn, right? Because
Yeah.
the thought process is one of institutional investor versus retail investor, right? Institutional investors lead and retailers follow commonly. And the biggest reason for institutional investors to move to the sidelines is the influx of supply that allows them to offload their investment dollars to the retailers commonly. This is the most frequently monitored scenario over long-term cycles, Ray.
Yeah.
It's just one of those reminders that when you see, it's why we talk about things like trading what we see, not what we think, Ray. It's
Right.
leaning into price action, even though we need a multitude of factors to make our decisions.
Because if you look back, they look at the whole year here and you go, okay, for the whole year, it's been pretty, it wasn't, I mean, it was fairly, uh, level or not. The volatility wasn't as crazy. And then you
Yeah,
have, 2 months of just straight up,
yeah,
basically. And I think you do get, like you said, Kevin, a lot of people going, whoa, wait a minute. Okay, we've had our run. It's time to take some of the profit, take some
hmm
of the take some of the money off the table, put it elsewhere, do other things with it, and because that's quite the run. You know,
yeah.
I mean, look at that for the year. You didn't see it like that. I mean, that's 2 months of just straight up.
It's been remarkable,
Yeah,
both in percentage and its resiliency, I would suggest.
yep.
The levels we've drawn in should be things to monitor. So closes above the gentle downsloping white line at the top. Closes above that would be bullish in nature. A close below the 50-day would be potentially significant, being that we've been above it since April 8. So that gives you a long 2-month window above the 50-day. A close below it would be a reason some traders would lighten up on NDX. A new matching low would be confirmatory for support, but a close below that level at 28,600 would be a significant development for bullish traders as
Yeah.
well, who probably would look to take a little bit of profits underneath that ledge. I shouldn't say probably, who would potentially lean that way. They might make some decisions to get a little defensive under that level. And then, of course, everybody knows that I like to draw those Fibonacci sequences for validation. And Ray, there's enough to
Shocking.
validate that ledge too here. If we fell through and made lower lows, we could find ourselves maybe down into the 27.7 or maybe even the 50% retracement of that entire move. And none of that should surprise us, Ray,
No.
because what goes up does come back. We get tests of support. I find this area well down here to be notable because I always remember that common idiom about breakouts getting thrown back for support tests. Remember, what was resistance can become support. And we know that this was a resistance zone for us, at least these two. And then once we broke through it, Ray, it was off to the races. So this could easily be a support zone for us, kind of like what we see with the S&P 500.
And if you look right there, we have your cursor right there.
Yeah,
All right. That spot. Look, when it did break, look how it kind of hesitated before it took
yeah,
off in that same
yeah,
range. All right. And so, yeah, I mean, and then, and then here's the thing. If it does pull back, let's say it does break down and gets below that 50 and gets back right back to that level of support right there that you've drawn in, you know, are people going to go like freak out of their mind? It's like, well, wait a minute,
yeah,
folks.
they
I
are.
mean, it's, you're right back to an area and still a very high that it made, back then when it was making those highs, people were going, oh gosh,
Yeah,
no, it's too high,
yes.
and but they were loving it when it was there, right?
It's Ray, it's the hardest part about being a trader. We can draw in all the lines we want, but if you're along the NDX and you don't take anything off at these elevated levels, whether it's by on weakness, so a close below the 50, a close that makes new lows. Let's say you waited until here and then you made a decision right there. Well, that movement is significant, right? It's
Yeah,
about a 9% drawdown to that zone. And that's assuming that level holds as support. So the trader says, well, I don't know if I can stick around for a 9% move, so I'll take a little bit off. But
yeah,
then you find yourself down here hanging out at the 61.8% retracement, former support. And again, Ray, I'm reminded that we could set all the levels we want, but when we should be buyers, it's not going to be comfortable. And when it's comfortable, we probably shouldn't be buyers necessarily, right? These are, again, contrarian thoughts, but they work in the approach that many of us traders take to the market, and it's why we talk about it in advance. It's why we think, hey, this may occur. It could happen. I don't
yeah,
know if it will, but if it does, here are the steps I would like to take so that I can participate at that level if that's what I'm looking to do. Having
Yep.
that stuff kind of thought out really, really does help, Ray.
Yep. And then, and the same, at the same vein of that also is, we say this all the time in workshops is, what's your exit strategy? Did you have that as an exit strategy before you got into
Yeah.
the trade? So you can protect yourself and manage appropriately. I
Yeah.
mean, you know, if you catch yourself saying, "Oh, wait, one more day," that's really not a strategy.
Unfortunately, no.
No.
But Ray, it's funny the way that this goes. It's a lot of the time if you find yourself uncomfortable with the level of technical analysis you're doing for your own planning and your process, you can fall back on just trade management to
Yeah.
give you the comfort to stay invested. And what I mean by that is sizing your positions to smaller amounts. Fewer shares,
Yeah.
fewer dollars becomes easier to manage, especially if you're feeling confused by what the market's doing, if you're not familiar with the technicals behind it, or if you can't really justify what you're seeing, right? It's not uncommon for me to look at the market and go, I just don't know.
Yeah.
That's not an uncommon scenario.
And if you're saying that, sometimes folks don't feel lonely.
No,
Yeah. I mean,
you're not alone.
yeah, and then trade, like I said, trade appropriately. Even if you can, trade 100 shares or do 100 shares, don't or instead of 1,000 shares or whatever whatever your portfolio you can handle,
Yep.
but trade wisely.
That's the idea, Ray. And for those of you who are maybe new to our channel today, I'll just let you know we've got many, many classes here on the channel. The archive is deep. And if you were looking for things like trade management or proper position sizing or trade planning, any of that stuff, there's many a video
Yep.
available to you here in the archive. You can use that search engine to find them pretty easily. So don't hesitate to dive in there. It's one of the reasons we archive so much of the content we offer you here live every single day. Ray, small caps doing really, really well here.
Man.
Look, we're just residing up at these elevated levels, right over 3,000. I remember when 2,000 was a big deal for the Russell. It wasn't that long ago, but we continue to see small caps grinding higher in the face of a thought process that suggests by the end of the year we might see rate hikes, and yet the Russell is devouring that concern and moving higher nonetheless.
Yeah, I know. I know. With the last jobs numbers, they said that hike. Especially since unemployment went down, but the job number was as big as they was hoping for. So they're thinking,
Hmm.
it may either stay steady or it could get a hike. Because of all that. But look at that. Look at that channel. That's like you couldn't draw that in any. Yeah, I mean, my goodness. And then
It's steep, Ray. Does this worry
yeah,
you? Because, and I say worry only in the sense that you and I both know a shrinking of that range. It's tightening as we move into this level. And granted, we can't really call it resistance because there is no true resistance outside of the prices we've run into over the last 5 to 7 sessions. But this is a rising wedge that is tightening, tightening, tightening. Is the risk factor perhaps to the downside in the short run?
yeah. I mean, when you have this, just like you kind of see the same thing you're talking about earlier. People look at this run, they're like, "Oh yeah, yeah. Ooh, maybe I need to start taking a little bit off now. Take advantage of some of that the profit. Get that profit taking going." Could that be the case? Yeah.
Mm-hmm.
Um, is it right now? No. It's channeling right up through there. So you might want to see, hey Kevin, draw your fibs in there again.
Yeah. So let's go from the bottom down here in late March to our peak. Oh, look at that, Ray.
Hmm.
Right to the 50 day. Are you kidding?
Yeah, right on it.
So, okay. So, Ray, tell me, what does that entail you when you apply a Fibonacci sequence to this? And you're saying, all right, if resistance that we've created over the last 2 weeks here holds, what does this possibly give you in the way of planning for the Russell here short term?
Yeah, so you see that break of that support that you drew in the angled up
Yeah.
the diagonal. You break that, and then you got an interim, little bit of a support resistance range right about probably the 30, 20, no, about 29. Come down a
Okay.
little bit.
Okay. Right
Yeah,
about
right,
here.
yeah, right there.
All right. 29.30 to 29.40.
Yep. And
Okay.
so start watching, see where it's going to rebound to. If it breaks down through that level, if it you get a break of that, it's going to hit that 23 sequence.
Yeah.
That's what you look for, and that's kind of the things that happen when the Fibonacci when you break those levels. That's
Yeah.
you kind of retrace. That's why it's called the retracement. It retraces down to those levels of support and resistance. Um, so you can kind of look for that if it
So,
does break those ranges.
So again, from a standpoint of management, a trader might say, all right, under the trending, the uptrend line, which is steep, admittedly, a close below the uptrend line increases the risk that we go lower. Doesn't necessarily mean we go all the way to the 50-day or our 23%, but a trader would say, well, if our risk is increased that we get beaten down a little further, well, then do I want to participate in that? Or do I want to generate cash and pull some of that trade off? So that's where a trader might make a decision is, hey, under this line, I'll make a decision. Under
Yep.
this line, I'll make another decision and
Yep.
sell some more. Or under this line, okay, now I need to get even more defensive because not only are we breaking a 23% retracement, but we're breaking the trending moving average of note, in this case, the 50-day that's been held since April 8th. So you're looking at 2 months and a week, that's kind of or 2 months long. That's giving you an understanding of true trends. So again, even if the technicals don't line up for your process or give you the comfort you're looking for, you can still set levels under which you would take action. And really, that's the key and the responsibility of us as traders so we don't put ourselves or leave ourselves rather in
Yeah.
uncomfortable situations, right? That's the way,
Yeah.
at least the way I think many traders consider it.
And one of the easiest things you can do, folks, especially on the Thinkorswim platform, is put an alert at those ranges. So
Oh, yeah.
maybe it's just an alert that to brings you to focus in on those, what's happening there with indices, and then look at your individual holdings if you're having, different stocks, see what they're doing within that, because then you can maybe do a little bit more deeper analysis, find out what's going on. But yeah,
Hmm.
put those alerts in there. At least it'll clue you in to say, okay, I need to go check this. You know.
Exactly. So not only, Ray, can we set the alert to be notifying us, you can tell it, hey, notify me when this happens, enable the detail, play a sound, make something obnoxious. If you want to edit a custom sound, you can throw it in there.
Flugelhorn or
I know
something.
some people who like to do this with their preferred, movie quotes that tell you to do things, take action. This can be really helpful, but you can also build this in to actually place a trade and be prepared to
Yeah.
send that off based on that alert. Hey, if you're looking for some guidance there, in addition to having stuff like this available in the channel, don't forget we've got trader teams available to you 24/7 on the trade desk, so you can always call in and speak with somebody and get a little bit of a helping hand here. And we always invite that. I was a representative on the phones for about 15, 16 years, and I spent a good deal of my time walking traders through not just planning in their process, but also the platforms. And as a trader, I enjoy that stuff. That's what led me here. I think you'll find a lot of our trade desk representatives enjoy the same thing. So don't hesitate to reach out and chat with somebody about this stuff, everyone. Ray, let's talk about the semis here. We know the strength of the semis. We've got a pretty interesting market day. I'm leaving up our 50-day moving average once more because it seems to be the
Yeah.
prevalent, notable moving average for all of these groups. What else are you paying attention to on the semis here?
Yeah. It's kind of the same scenario we've been looking at with the indices. But look at that. Yeah, right there. Draw that level of support in right there.
I'm right there. Yep.
Yeah. And your 50-day, I'm not sure. I use a little quicker. I got a 40, and if you look at the 40, it's right under today's candle.
All right. Well, let's just do that. Since you've mentioned it a couple of times, let's make my purple line a 40-day now.
Sorry about that. Messing
There
you.
you No, it's
Look at
good. You're
that.
right on it. All right.
Yep.
So are you looking at that as a potential test of the 40-day here?
Yeah, and if you look back, look at the right around. I'm not sure what on your can't see your date on the. There you go. What date is that?
Which
Level
one?
of resistance and support, right? Go up a little more to the left, right with that little yeah, right there.
The big
And
gap out of it,
that
May
gap.
22.
And you see if that gap and look where it is now. It's almost on that same level of that gap.
Okay, I see what you're saying. So I could snap this line and duplicate it just to here.
Yeah.
So the low, so the fact is that Friday's low got there,
Right on it.
traded below it, and then today we got
Gapped
this
up.
huge gap that gapped back above the 50-day.
Yep.
So let's zoom in because now we've learned something with the gap level, right? We have a gap
Yep.
from a horrible Friday into a long weekend, but we've maybe given ourselves a short-term level for monitoring. And now, while my lines are valid here on the daily, Ray, I think a lot of traders are going to monitor now this ledge that we just created with the open today.
Yeah. And if you look back to the couple weeks ago, a few weeks back, you see that same stuff going on right back below,
Whoops.
back, yeah. And
I
so,
first thing you got to do is set a level line, Ray.
yeah.
You ever try and hang an unlevel picture? Come on, we know better than that. There we go. All right. So, all right, extend to the left. So you're
Yeah, look
talking
at
about the
that.
fact that it's caught all of this stuff too, right?
Yep, that's what I was looking at earlier as well. And you see that gap up, sitting right back on top of it again. Is it going to hold? If it does, you might see it come back up and trying to hit the that moving average, the goal when you got written in there, that 100
Mm-hmm.
or 100 period, I should say.
Yeah, this is the one. So as it were, in this case, this is the a 30-day 1 hour bar or one
Yeah,
hour candles. So the 100 period is a 100-hour moving average. Seems like we've been all over the map in that case
yeah,
because, of course, we've noted it's kind of gone sideways, like the Nasdaq, like the S&P here. So the trend in the 30 days is more sideways than it is trending. Maybe the longer term, like the 200-hour, might be a little more pertinent. See, when we were below the 200-hour, we got bounces. This one did make a significant move below the 200. Now we're bouncing. But Ray, should we be possibly thinking that any bounce into the last high up here might be resistance?
Oh, I would think so. I mean, from just looking at that, I mean, if you draw to the left even now, and look at that to the left. If you go left,
Yep.
yeah, look at that. And so several areas where it's tried, it's came to or either broke, came back up through it, or down. And so yeah, I think you got a good line right there, a good level drawn in, and to see
Hmm.
what's going to happen when it gets to that range.
And obviously, every one of those moves comes with a headline, comes with some sort of
Oh yeah,
additional commentary that made prices maybe move initially. But it's the knowledge of those levels previously acting as support or resistance that's also playing in to the movement we're seeing here. So, could we get a rally continuation that takes us into the 200 period? Sure could. But if you were the trader that went long on Friday in the ugliness, or maybe even in the after hours as things started to feel a little overdone, then this target up here might be a spot where those traders who were happy to pick it up down here are willing to take some off because up at the 200-day, that's an 8.5% rally. That would be a very speedy 2-3 day window, and you're
yep.
up 8.5% on a pretty broad, not broad, but rather large industry group.
Well, what's crazy is it's been kind of beat up lately, you
Yeah.
know, and so but now there's getting a little bit of rally and you can see that rally today at the gap up,
Yep.
what's going on. So it'll be interesting to see how that rolls in. Um,
You could imagine it would be inverted relative to what you're getting out of the semis because
exactly what
it
yeah, that's
plays
what
the other
I was
way.
going to bring up.
Uh,
It's
but I
yeah,
think for a lot of traders, everyone, it's as simple as obviously keeping an eye on that 50-day,
yep,
which is
yep,
again some consistency with the overall market because we're seeing the 50 be pertinent for the S&P, for the Nasdaq, for the semis. So important thought process, perhaps.
yeah.
Okay, Ray, let's talk about oil here today. We're going to use the future symbol on this. Oil has come back dramatically. It's allowed the market to hold up, I believe. It's also part of why the market hasn't given a lot back necessarily. It's why the consolidation's been playing. But oil is at a pretty interesting spot. I say that because Ray, we completely round tripped the Iran conflict move, right?
Yep.
here we were late February trading at 67 a barrel. We're trading at 68, 69 now. We've completely moved up and then crushed it all the way back. But Ray, this is a pretty significant level, not just on the daily, but potentially on the weekly as well. I drew in this downtrend line that got broken with the conflict. And Ray, this looks like we did that standard technical move, broke out through what was the resisting downtrend line, rallied, and now we've been thrown back to test that former resisting downtrend line. It's possibly support now, Ray.
And it's right on it too. I mean, it's I have a different time frame on that, but it's sitting right on that level of support right now.
Yep.
So what you have the 10-year?
This is a 10-year that I've zoomed in, so we're probably looking
Yeah.
now only about the last 2 years. But yeah, that ledge right there at around 66 and a half,
Yep.
67.
Yeah, it is. It's right on it. And so, this recently in the news, it's showing different, a lot of different oil producing countries are increasing their output.
Mm-hmm.
Depending, and then of course, and if you're in the Straits of Hormuz, getting it through, it's getting through, although maybe it's not as fast as some might like it, but it is getting through.
Right.
And I think you and I were talking about earlier. Now the classic supply demand discussion is going to come back into play. It's going to get
Okay.
it's
So
back. Not I can't say normal because there's no way it can be normal. You know what I mean?
I do. Normalcy is a
Yeah.
very relative term, right? Right.
Yeah, exactly. But yeah, I think Kevin, you talked about this too in earlier shows about the whole oil discussion, right?
Yeah.
And is it war related now, or now is it getting back into discussion of the supply demand as opposed to nothing's coming out, because now it is.
Yeah.
And so yeah,
No, I
that's
think Ray, tell me this at least. I mean, you would assume that traders would look at this as a more comfortable way to manage oil trades, which is to say, not tied to headline risk, but more tied to just basic standard supply demand story.
yeah. But I think we still need to keep in the back of the mind because it's not done out there yet, obviously.
Yeah.
And so you never know how it's going to roll. But I think even if it does, with the other countries and some of them are outside of the straits, as they increase output, you're getting into the normal discussion of supply demand.
Yeah. So, Ray, I wanted to do one other thing here for traders. If you were wondering about a potential bounce, so just as a general thought process relative to breaking down here, we could always use the Fibonacci's, but I'm going to draw in one thing first, which was a pretty substantial level of support at one point, was
Yeah,
right in this vicinity, right around 86 or so.
I'd
I'm
agree.
going to try and flatten that line so that it is horizontally at 0 or approximately there. There we go, or thereabouts.
That's good.
My mouse is giving me trouble. But I wanted to set that level, and then I'm going to draw a Fibonacci from the ultimate peak to our recent low. And look at what it lines up with, Ray. It happens to be
Wow.
the 38% retracement. And the reason I bring it up is that if you're bearish oil, you can stay bearish oil potentially all the way until it rallies into as much as the 38, possibly even the 50% retracement level, Ray. So that, this any bounce here would be potentially considered to be counter trend, but counter trend doesn't necessarily, that's short term counter trend, right?
Sure, but
Not
yeah, that's short term
necessarily long term counter trend.
because it's trending down, obviously. Uh,
Hmm.
so yeah, I mean, I think you pulled a good point up with regard to that level at the 86 level. Um, yeah, if it bounces, then that's a could it range bound there for a while
Good.
potentially? Yeah,
Yeah, it could. And you know what? I mean, first thing traders are going to say is, are we back above the 200 or maybe even the 20 day? If we are, then maybe we can squeeze into the 38% retracement. And if we can
yeah,
take out the 38, maybe we find resistance at the 50 period moving average, or maybe we move through it and we get all the way back up to 92 a barrel, none of which is going to feel great. But
no,
I bring it up because, again, what we said earlier, Ray, about the broad market, right? The market gives us our opportunities, and when it does, we probably aren't ready to participate. When we should be buying, we probably don't want to be buying.
Yeah.
And that doesn't mean you should apply that to here to oil. What I'm simply suggesting is by looking at the chart, if you were a believer that a bounce were coming, here are a couple of levels that could potentially act as resistance in the price of oil per barrel. Now, I need to point out, everyone, we're working with the futures symbol here. This is not advocacy for futures trading. You do need to
No.
be approved to trade futures here at Schwab. You need to go through our requisite steps. That's certainly not appropriate for all investors. So make sure you do your necessary steps if you're interested in trading futures as we look at those futures symbols here. Ray, the other thing that people have been asking me about a lot lately, at least, has been Bitcoin, which has been languishing. We're still using future symbols, but Ray, I got to tell you, something is underlying this trade here. We've been talking about it, a kind of a range bound scenario, about 80 to 81,000 on the upside and about 60,000 on the downside, except we broke that here just over the last couple of weeks. In fact, we've made a new downtrend line like so in
Yeah.
the midst of making a new bullish uptrend in RSI. So we have a bullish divergence in Bitcoin after making lower low last week.
Yeah. And look at your 20 period moving average. I
Yeah.
mean, it kind of spiked above it, but look what it fell back right back down to it. And it's right
Yep.
on. And so it's creating that little mini channel using the 20 and the line you just drew with support, the diagonal support line going down through it. So it's clearly making lower lows, lower highs, and it'll be interesting to see if it does can bounce back through that. I mean the 10 periods acting right now as a good resistance level.
Okay, so we've been above the 10 periodically, which is why I was like, yeah, I feel like the 20 might be a little more pertinent through
I'm
here.
sorry, I meant to say 20.
Okay, that's cool. Notice we had this back in April when it was support for a little bit, and then
Yep.
suddenly it wasn't. So from April or May 18 through today, we've been below it. Now we were above it intra-period, but it remains to be seen whether we close above it, of course. Look, I mean, this was not to say that that has to hold, but that's the level that we fell to. That stands out. I
Yeah.
mean, it was a little bit of a flaggish situation, and then you held it, rallied higher, met resistance, took a breather, come back to test support. What goes up comes down. What breaks out will run for a little bit before coming back for a test. I mean, this stuff is kind of consistent from time to time. It doesn't mean it's
It is.
easy, but it's certainly notable, right? We always try to bring back these same concepts to any chart we find. My favorite part about technicals is that fractal nature, as they say,
Yeah.
the ability to apply those details to any time frame.
Yeah. And look, what's the trend? It's easy. Like we teach the class, first two things, trend, support, resistance. There's a reason for that.
Yep. Hey, Ray, you're not going to believe it, but we're at time, sir.
Holy
This
cow.
has been
That was quick.
a speedy conversation that found us discussing much more in the way of standard technicals, perhaps, than maybe more analysis of the broader market. I do want to point out that this week is another week where we get started, believe it or not, the end of the week with earnings. We're going to be hearing from Pepsi. We're going to be hearing from Delta Airlines. There were a couple of downgraded companies today in the airline space. One thing to note, if you were looking for that, just as a reminder, one of the watch list tools available to you here under the public watch lists, but lovers and losers are analyst upgrades, analyst downgrades, and you can keep a close eye on what's being moved any given day. I just wanted to remind you all about that since we didn't have the opportunity to get to those symbols for you today. I apologize that I was a little verbose in our conversation. So thanks, Ray, for being here, though. Love having you on a Monday, even though we only get to connect about once a month here in this show. But always a pleasure having you, Ray. Thanks for being
Oh,
here, man.
it was great to be with you, and I'm glad you had a good fourth. And everybody out there listening, I hope you had a great fourth as well. And can't wait to get back.
Yes, let's and by the way, for those of you wondering, Ray and I are reconvening here in the very short term. We're going to be out in Chicago in the middle of July, the middle of this month, just a week
Yep.
and a half out for our next event. If you've got the opportunity, I'm not certain if our seats are all filled up for that one, Ray, but check
I
that
think they can
out
still.
on
I
the
think
calendar.
it's still open for registration.
I think it's still open for registration as well. So schwab.com/coaching. Look for our in-person events. Big thanks to Connie in the chat today. Remember to follow us on X. And if you're not subscribed to the channel, you definitely want to subscribe. Take advantage of the archived sessions available to you there for all of the classes that we've got for you Monday through Friday on a live basis. So, and finally, if today's conversation was interesting or helpful in any way, we review these, get them into the archive as quickly as we can. Your thumbs up down below will help us out on the replay within the YouTube algorithm. So, with that, have a fantastic rest of your Monday. Keep it tuned to the channel, and we will look forward to catching up with you again real soon.